The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street, just as cute and cuddly as I can always be. Anyway, we've got an exciting November. That's actually 4th here, isn't it? I better change that while I'm looking at it. Oh, Mr. 4th. Mr. 4th, TH. Gotta always, it'll bug me if I don't change it. Control Shift. That's what it is. There we are. November 4th now. And it is a gorgeous day down here at the headquarters of Technical Trading and Investing in Tampa, Florida. And, of course, an interesting market nonetheless also. We've had some huge moves in commodities. Gold off a couple bucks, not a big deal. But, of course, it's the black gold. It's the Texas tea is the big mover out here. $77.22 on crude. And if it gets a little cheaper, it's going to be free, right? So what's going on with crude here? We're going to try to talk about that a little bit. Andy Heck is back from his well-deserved vacation. I talked to him just after lunch on my way back home. And I think he's got some interesting things to talk about in the 5 o'clock hour. And, of course, after the show, we've got Tom O'Brien. But we've got an interesting market. And it is a market nonetheless that, what can you say? It's not going to be easy. It's kind of like that Ike and Tina Turner song, Proud Mary. In their version, they always said, we never like to do things easy. And that rolling on the river. And, yeah, what can you say? Old Ike, he liked to beat on his women, didn't he? Ugh. Anyway, they don't like to do things easy in this market. I don't think it's going to be easy either. I think we're kind of range-bound probably to the end of Christmas. If you've been listening to the show for the last couple of days, I basically said our last big opportunity for a blowout to the downside I thought was over. We have 2 months of probably slightly increasing prices, and if you wanted to make any money, probably going to have to go for the short squeeze. And not going to be holding any companies overnight for earnings either. We're going to get into that. We've had some stocks with some fairly big movements after hours, both up and down, but not a lot of rhyme or reason why the way that these are coming out from sector to sector. But what can we say, especially the way that the S&P is hanging up, even with the huge movement in crude, and why I was hoping that Andy would come back. Maybe I'll have to call in and ask him some questions. But I was really interested in how these companies, which are basically energy is about 30% of the S&P cash, how does that not, how are we not down 50 points today on the S&P instead of probably at the height of 20 and now, 10 or 8? What do we have out here? And we're off 6 now on the S&P cash, 2.45 billion shares. I'm going to say that this comes awful close to a decent test of the 2000 level, which if you either got my newsletter or you listen to the show, I've been talking about pretty much nonstop since Friday. But pretty good indication it's going to be very, very hard to get people to start puking up their shares before the end of the year. It is just one of those times where it becomes very tough to confuse or get people in that. Andy says refining spreads are a bit stronger So refiners are doing okay. Maybe that's the reason. Well, you would think that refiners are only about 10%. That other 20% is still a lot more than the 10% of energy companies. So it's got to be problematic. Hearing a lot of discussions about just what it is and the cause of the downdraft. I know some people thought, hey, well, we're going to go off against some other people and we're going to hurt the Russians. Other people speculating that what we are seeing is a huge move down by the Mediterranean area in crude to discourage all the huge amount of fracking that we're doing here, maybe shutting a few of those wells down, and they can intermittently start raising the prices of crude. But just too many people out there are fracking, and they don't like it, so they're going to drop the prices and try to get competitive. Of course, their crude prices are probably, what, 10 or 15 bucks in Saudi Arabia or less. And that makes it awful tough if they truly want to pump a lot of crude and cut down and keep market share. But I hear both those arguments. It's hard to understand which one is which. Of course, we're not exporting a lot of oil. So my thought is, do they really need to drop the price of oil that much? And the answer, I don't think is yes. But maybe Andy will think about that. Anyway, of course, I'm still looking for some blowout moves in crude to set the low, some blowout moves to set the low in gold. And during our conversation at lunch with Andy, he said he was visiting some coin dealers or gold dealers up in New York. So we'll look forward to hearing what he has to say about his misadventures in the big red apple. But I digress, don't I? I'm always digressing. And why this show wins the digressing awards every single year's hands down. But on this day in 1929, actually, in an attempt to calm a panicking investor and investors, the New York Stock Exchange announces that it will be open for trading only 3 hours a day this week. The investing public takes no comfort, though, trading an astounding 6 million shares in just 180 minutes, more than twice the level of a normal full day's trading just weeks earlier. And it always becomes a issue here that if you don't know your history, you're bound to repeat it. And interestingly, trying to bottle up the market generally makes it worse. And I think since we've widened the spreads a great deal, especially, how long has it been since we've had a limit down trade in anything? When I started, it was limit down, limit up, and everything all the time. And it seems to me like we're doing a lot better in the markets. But again, I digress. Of course, we've got the elections today. There was a news article out this morning that I think changes a great deal of what I'm looking for next year. We'll talk about that in just a second. But in the elections, we've gone, the old pendulum is what they like to talk about. And we go far left, we go far right, we go far left. Winston Churchill probably had the best read on Americans that I've ever heard. And I just thought I'd share it with you today on an election day. You can always count on Americans to do the right thing after they've tried everything else. And that's kind of what we do. I kind of see the answer right off the bat, but it seems like it's just too easy to do the right thing. So we try many wrong things till we get to the right one. But eventually we figure it out. But I can see how a lot of the rest of the world thinks we're kind of crazy. Bipolar, maybe. But we're not. Of course, I am absolutely going to do handstands and cartwheels tomorrow. Once we are done with these elections, if you haven't lived in Florida, there is a nonstop barrage, kind of like the bombing of Britain every night, except that this is ads, and the ads have been horrifically bad down here, and it is one of these things where you just don't even want to turn on the TV. I only watch things that I can TiVo and play back later. and I can't hardly wait till tomorrow and the ads are off the TV. They may be off TV today, but I can't take the chance. I might turn on the gas and put my head in the oven if I see one more of those ads for governor. One more ad saying that we've got to legalize marijuana. One more ad that says that we're all evil, and only if we vote the way that the person wants to say that we should vote are we okay. My core beliefs don't need any additional ads to let me know what I think the right thing to do for the majority of our people is. And I don't think a lot of people other do. Are really that many people swayed by those political ads? Or are they just trying to keep us home by being so obnoxious? Next bliss. Oh, watch out. Next bliss is Christmas commercials. It seems like a lot easier to ignore Christmas commercials than anything else. I can just tune them out. The one thing, though, is I do get easily depressed during the Christmas season. And there's only one thing that can do it. And it's those horrible songs that they bring out right at the end of the year. Is there a song that makes you want to kill yourself more than Old Lang Syne? Not the old song, but the Dan Fogerty version of that song where the snow turns into rain. Oh, the last 3 days of the year, I can't even listen to the radio station because they always play songs that just want that. I got to chain the oven shut because I'd put my head in there listening to those horrible songs. There's a reason why they only play them once a year, and that is that they're horrible. Horrible, horrible songs. Why can't we be happy? It's a symbolic new year. Doesn't really mean anything. Can't we just be happy to the end of the year? Anyway, I'm pretty good till Christmas, but as I start getting into the end of the year, the chances of that horrible Dan Fogelberg, that's it. Oh my word! I think he's guilty of a capital crime with that song because there's only a few songs out there that make me want to slit my wrists, and that's one of them. Oh, horrible, horrible song. I digressed again. Okay. Anyway, as I think about politics, I was going to talk about Orwell for a while, but I think maybe I'll leave this to another day. I did see an article in the news this morning, and I don't think it's gotten a lot of traction, but I suspect if it's true, and I've seen no real discussions that it is not. It looks like they found a rather huge smoking gun of Nixonian proportions. I think because it's the election today, it's going to be ignored a little bit. But I think if we think politics is over, I suspect we're looking at the equivalent of the Watergate hearings all next summer. And I'll talk a little bit about it when we come back, but not much, and then we'll get into stocks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, I had somebody IM me. What are other songs that are problematic? Cats in the Cradle. If that doesn't make you just want to end it all, I don't know what else does. And Taxi. I'm going to have to check out Dan Fogelberg because the other two guys died, I think, in car crashes. All these people that write these severely depressing songs might be dying in car accidents. But Cats in the Cradle, boy, is there another one that just makes you not want to have kids? And Taxi, boy, just the pathetic loser that's just going to get stoned in his car. Ah, boy, talk about downers. This is a season to have happy songs, but they tend to play all those songs almost at the end of the year, probably to catch these people that are right on the edge. But I don't know. They're banned in my house. That's all I have to say. Oh, Seasons in the Sun. Yeah, but that's just a horrible song to begin with. And people hate it because, but I guess it is a suicide song, so I will agree. But anyway, they're happy. Anyway, Raoul Wheel was found not guilty as the head of Global Wealth Management, UBS. Why some of these people are incredibly guilty, it seems like they are not the people getting charged, and the people that are getting charged seem to be incredibly innocent. Raoul Wheel yesterday was found not guilty, and not just not guilty. After the federal government spent millions of dollars chasing him down, They presented their whole case for 3 weeks. He said, well, I'm not going to do any case. We're done. You didn't prove it. In less than 2 hours, the jury's back. He's back out on the street. If you ever go to jury duty, make sure that you sit around for the whole thing, because it's not uncommon, especially in one of these high-profile cases, to see the government exercise its discretion horribly. Do we have enough time? I was going to say, just politically, if you think that things are going to get better, my guess is that after the news I saw this morning, that it's going to get worse. We've got a retiring attorney general who looks like he's going to be in some rather hot water. And he may have not told the entire truth to Congress. So we're probably going to have a bunch of stuff on that. We do have basically the smoking gun in the IRS case that came through this morning. At least I haven't seen anybody say that it's not true, so I'm assuming that normally a lot of people would say that it didn't happen. But apparently they found the emails just in somebody else's account, not in the IRS lady's account. But they pretty much prove that what we've known all along, other than it's always the cover-up that causes the issue. The initial crime is normally bad enough. But I haven't seen a lot of people taking a hard look at it. But my guess is that this is going to be the summer du jour of being flagellation of next year. So I'm not expecting to get any better or gridlock to go away. And I think it's, we'll have to find out. But I don't think much is going to change tomorrow after the elections today. And kind of tough for me to say that we'd see anything else different if anybody else was differently elected. I, of course, went and voted today. I held my nose because neither choice is terrifically appetizing, but maybe a one-day-old McDonald's burger to a 10-day-old McDonald's burger. Not even real good food choices on most of the elections around here. But nonetheless, it's the, if you know the joke, the lesser of two evils. Anyway, we're going to look at some of the stocks that are out here moving. Of course, I was looking for that test of 2,000. I suspect we've done it, and okay. 2.6 billion shares right now. And we're going to look at some of these other companies that have made light volume highs. But I'm going to tell you that if you watch these over the next 2 months, you're going to see that the back downside is probably highly muted. Because we need to get people on the sell side of these companies. And why there isn't a lot of upside, the problem of shorting these companies is that you're not going to get a lot of downside, and your brethren that are shorting these companies will start covering and force you to cover. So if there is a statistical inference to be drawn in the next 2 months, it is incredibly difficult to be short in a market that's at all-time highs. When we come back, we're going to look at the Cooper Company. We're going to look at a bunch of other ones and some stocks that are moving rather large today, like HLF and Priceline.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Looks like I've stirred up a real hornet's nest with these songs that make you want to end it all. People are confusing really bad songs with these songs that are just so depressing that you want to jump off a cliff. But just if you got any, but they've got to be horribly, horribly depressing. I mean, even Vincent, which was a song about Vincent van Gogh, is a beautiful song, but not depressing, even though it's about suicide. And these other songs are far more depressing to me than Vincent. I thought that Vincent's actually a beautiful song. See, we get everybody shooting around the issue, which is it a bad song? Yes, we know that Tie a Yellow Ribbon Around the Old Oak Tree is a horrible song. But, you know, it's a horrible song. But I don't want to end it all. Taxi, all those other songs, just, you know, these are the songs. I'm talking about the songs that make people. It's the songs that people they tell deaf people, you're lucky. You might have heard this song if you could hear, and that is how bad those songs are. But right now, I've just got top 3. Anyway, you got a question out here asking, can you look at CCJ? And I hate to interrupt our discussion about music with anything financial, but I guess I will digress. CCJ is Cameco, of course, the uranium manufacturer. And you got basically a setup here where you could conceivably buy this thing at $15.55 is if it comes down here and touches this low. I know there are a great deal of mini reactors that are going to fire back up. They're going to have to, especially in Japan, and maybe there's going to be a floor back in it. Problematically, though, as crude comes down, it will affect all of these because the desire to build new reactors is also problematic. And, you could make the argument that if fusion is only 10 years away, you couldn't even build a new nuclear reactor by then. But from what I've been watching, the ones in Japan are probably still a couple of months off. And I suspect that you're probably going to see some kind of low with the restart of all those reactors in Japan. Just seems to me like it happens too many times. $15.55. Could it get down there and just go sideways? That would be my fear. That it is, you got light volume, you got everything you want, but does it make a V bottom or does it make a U bottom? And my guess is this thing can make a U bottom into next year until those reactors in Japan get fired up. No, not the theme to Taxi. There's a song called Taxi. And it's about the guy that picks up his old girlfriend, and she's become incredibly rich and wealthy, and gives him a $20 tip, and he keeps it, and decides to go smoke a lot of dope and drive his taxi. Basically, he's become a giant loser and smokes a lot of dope. And it's tough. Like I said, I hate to get into more financial stuff in the midst of our show about music, but that's it. Other things going on out here, we said we'd look at a few of these stocks, and certainly like the diamonds, we are seeing basically a challenge up here on lighter volume. September 19th, 173.32. We're getting into it. We've gone sideways now for basically 3 days on it in the DIAs. And the energy actually was not bad off the lows. And this is another reason why I suspect, while most of the run is back in, if you are looking at my power law vector indicator, I'm not highly bearish before the beginning of the year. 3.7 on the way down, 4.7 on the way up. Basically, you're going to say we've got 15-20% more energy on this leg back up. And again, all the volume's fallen out in the last 4, 5, 6 days. But seasonally, I hate to be short the market, especially the last 2 weeks of January or of December. There's just not a lot of volume, not a lot of issues, and it almost ends up in a short squeeze every single year from the 15th of December to the 1st or 3rd of January, whenever the first day of trading comes back. And the last 2 weeks of August are generally very tough to get a lot of downside action going. I've just never been able to make a profit during those two times over about 15 years to the short side. We've got a lot of comments going out here. Anyway, you can always give me a call at 877-927-6648. You can also post a message in the den, music or non-music oriented, maybe even financial oriented. Or you can email me at path@tfnn.com. Anyway, this is one of the charts out here that makes it very tough for me to believe that we're going to have any down movement. Had a email earlier in the day that asked me whether or not I thought that there was any chance for more downside, and I said, you'd have to think that there was more than a 30% chance of downside to make options pay off at this level. Asymmetrically over time. If you do it enough, they'd work. And I can't get to that level where I think that there's more than a 30% downside chance for a market blowout lower in the next 2 months. 10, 15%, yeah. 30% no, but that's where the options are priced, and that's what becomes problematic. There are a few stocks out here that you might see some tax selling in the next few weeks, and I look at a few of these, and yeah, can you see there's certainly back up to it? Am I going to bite? Probably not. most likely these stocks will go sideways. Diamonds Foods had that huge knockdown in June the 6th with 2.5 million shares. I think that was on some financial accounting issues still creeping back. They're kind of coming back up. Kind of hard to keep a nut company down. But certainly this thing has come back up with 450,000, 250,000, and 250,000 shares in the last 3 days as it's gotten back into that huge candle back down. So normally this would be one I'd say, hey, go ahead and take the short back to 27. That's where the gap is. But my guess is that maybe it closes between now and Christmas a little down from here, but probably not significantly, even if they're weak. Another one is a company I don't know a lot about, ExamWorks Group, EXAM. Pretty good indication that it had tested the May 7th high, $38.61, with 1.3 million shares on May 7th. Got into it with less than half of that on October 31st. It's kind of come down, but a volume not going to pick up down here, at least not today, against that high volume high. So what does that keep you? Probably in the upper trading zone of this thing. Again, a lot of these stocks that just hang around are ripe come the first few days of next year to make some good money on. So don't get too despondent about it. Just means that you might make money later on some of these charts. Green Dot Corporation. This one is, if you're not familiar with the company, they are the ones that are going to be doing a lot of work with Walmart in getting credit cards for people that no longer have them after the giant blow up of 2008 in the housing sector, and basically running credit for a lot of people. But they do the prepaid credit cards. They're also going to be doing a American Express and Walmart and checking account business with Walmart. And that's pretty much where you saw these huge moves out here on September 24th on huge volume. This is probably in an upper trading range out here. Volume picking up a little bit more than that, but certainly you see these huge gaps getting tested. In this case, you actually were tested with higher volume September 24th, and so you needed some fairly decent volume over the last couple of days, and you really didn't get it. I think maybe Apple Pay is weighing on Green Dot a little bit. iShares, the IVV, when you look at this one, same thing. We've got it up to these highs. Anything within about 1% of the previous high when the volume is this light on an ETF, I'm willing to take as a valid test of the top. You got 3 dojis out here, which is not good on the iShares Index Fund, IVV. You needed almost 10 million shares. You got 6.3 million shares. Pretty much tells it all, but doesn't mean that you're going to get the rapid test of the bottom once again. Again, going into the end of the year, so you got to watch it. Land's End, of course, the company spinoff from Sears Holdings. And this one is another one. I think we brought it up a few days ago. Came right up to resistance, which was the September 18th high at $47.87. 930,000 shares. Got into it with 580,000 shares as the high. Has made its little pullback, but is there enough risk reward out here to do anything with? And the answer is no. You would have expected to start seeing a lot of volume today, especially on the pullback in the big indexes. I mean, we're off 8 points now. We were down 20. But, we got 2.7 billion shares on the New York Stock Exchange tape. If Land's End was going to blow chunks anytime soon, certainly that's what it would be. There'd be some volume out here in this candle today, and I just don't see it. I'm going to have to start seeing some volume in some of these. PepsiCo out here, another one of these companies that is up at these highs. Not a lot of volume, not any volume really to speak of, especially today, but hanging out at these highs. 9 million shares on the October 9th high, 96.22. And what do we have the last 3 days? 5.3 4.3, 4.3, 2.4 today. So is this going to take off and run? Probably not. Could it meander up to $100? Maybe. But 3% higher just doesn't do anything for me. My guess is it goes up, tags 100, and kind of wanders around between that 96 and 100 into the end of the year. Paul Corporation's PAL, another one up here testing its $90 highs on lighter volume. $91.83 on the April 2nd high with 1.2 million shares over it and kind of hanging above it. Pretty light volume today, though. 352,000 against that 1.2 million share high. And again, this is, if you're going to see price and volume break, this is the season where it becomes problematic. And again, you want to keep and write these down. I've got a notebook where I write down a great deal of my ideas every day. And I keep them for a while and have stacks of them. But a lot of times I'll say, I'm looking at that one, and I know maybe it's going to hang out till earnings. Maybe it's going to do something else, but I want to keep an eye on it. Let's get to some of the companies that are moving out here. I think I've shown enough of those. Priceline, of course, a huge gap down. Not too many times you get $100 gap down in a stock, but certainly got that with Priceline today. I didn't go through the earnings on it. Certainly we've got the volume you would look at, which basically puts this thing in a low of around 1,017.28. So I'm going to say with this kind of volume, you're certainly going to hit that, and much more likely you've got a big gap that's been around for a while in Priceline. And that gap comes back to October 10th of 2013, and that's right at $1,000. My guess is that we'll not only come down and test this low at October 13th, but come down into this gap at 1,000. And if volume can taper off back to this 1,000, you might have a bigger trading range over time back up to 1378. So, well, we got about a minute left in this segment. Wanted to look at cores, too. Of course, the wonderful IPO of last year got to $101.04. Now that we look at this thing, what's it doing? You know, fashion is fickle. I always like the fickled finger of fate from Laugh-In. But anyway, huge volume down. Of course, this thing has got a gap, and a lot of these gaps are getting tested, but certainly down to 68.55. You got a high volume low. You also have a gap that goes back to, what is that, 8/6 of 2013 with 15 million shares. So that's going to probably be fairly decent support. We could see companies like this base out here for a little while, gain some short interest, and could you get a nice 10-15% move in the stock in a short squeeze before the end of the year? I think the answer is yes. So you may want to keep an eye on some of these, especially if you are an intraday trader out here. When we come back, we've got a call, and we'll look at MCP, I guess, for that caller, if he's still there.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got a question in the den from Mike. And the question is, I guess probably because I've been talking about it for 4 or 5 months, is that these gold companies cannot take an extended period of low prices in gold and still stay in business. And that is problematic depending on how much cash they have. Question is whether Allied Nevada, which is ANV, can weather the storm. And again, it depends on how many acorns they've put away for winter. And in this case, almost all these companies, they haven't made a lot of smart decisions. The other problem that you have, especially in these small companies, is that they don't have to report all the time. If they're a big company, then they're reporting every 3 months, and you get the updated records on it. Unfortunately, these smaller companies, I think they have a different reporting standard. And maybe, Tom, this would be a good question for Tom in the next hour, is how to look at these. Maybe we just don't get them. Maybe you have to pay up for them through, like Tom could buy a new Corvette every year for what he pays from Bloomberg. There's a reason why, and that is that they do go out and spend a a lot of time digging up data. So maybe he's got better data than I do. But most of these small companies I've noticed don't really do anything more than 1 year. I can't imagine that things got any better in the last year for this company. Let me put it that way. They don't have a lot of cash. The question is, for a lot of these, let's say that gold goes below the cost of production, so they shut down. They still have to keep these wells, these mines pumped out, and a lot of it is dependent on what and how expensive it is just to let the mines sit. Because if they don't pump them out, they fill all up. Then it's 3 or 4 times more expensive to come back and fix everything and pump it all back out, along with how long it actually takes to pump it out. A lot of times can be months, if not longer. So I would look at that. Now, when we go to the chart out here, you know, a lot of these companies, the thought is, and I tell you just from a perspective of asymmetrical bets, it's hard for me to not see a company like this going to 50 cents and maybe not taking a swing at it. You just don't want to get knee deep in these companies, which I think is a way to make a lot of cash, actually. The problem is a lot of these companies are going to go out of business. The problem would be putting in a lot of cash into these things and not looking at them as non-expiring options. You know, you may get an option for a week or a month or 2 months. A lot of these stocks down here, if they don't go out of business, can be monstrous winners for you. And that's the opposite side of these trades. And I think more than anything else, you want to see these stocks go sideways for a while. And that is something that hasn't happened. But I almost call it, in fact, I was going to do it in my newsletter. I posted a couple examples in the newsletter today. I call it the Lazarus pattern, and that is it just goes sideways for 10, 15, 20 days, and you have very, very narrow ranges in them. And I call it the Lazarus because, of course, one day it just pops back up and it's back from the dead. And that's what you want to be looking at in probably these gold companies, and that is that it just quits going down. I don't think you want to be out here trying to catch a falling knife. I think you want to buy boredom. Either we're going to get a 50 or 100 point move down in gold, and you're going to catch these things at the lows, even if it's just for a trade. Or you are going to see these things bore people out of them. And if you can get 15 days where it goes sideways, that may be the key to buying one of these. Anyway, as always, sell when you can, not when you have to. And see you tomorrow, same bat channel, same bat time. And get ready for the Tom O'Brien Show. Maybe this would be a good question for him if he's listening.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.